Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 2nd, 2021. Happy New Year, everybody. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my YouTube channel, and I am on Twitter at AlphaCharts365. All right, so starting with the SPX, as we always do, you can see that the uptrend is firmly intact. Um, we have, all the moving averages moving higher, and we closed at an all-time high on the last session of the year. So that is all very, very positive. Doesn't mean pullbacks can't happen. Even if we retested the breakout, we're talking only about a 5 or 6% pullback. Still in the realm of possibilities, but as of right now, everything looks really, really, really good. I mean, it's hard to be upset about all-time highs. We're not in the, we can't really guess what's going to happen. We have to just see what, trade the chart in front of us, and that's a pretty good one. Let's look at the RSP to see how breadth is, and as you can see, the RSP has gone sideways for almost the whole entire month, basically. So had a big run. Now it's just consolidating its gains, letting the moving averages catch up. Everything looks perfect. Again, closing at all-time highs, just like the weighted average. And the pullback is a little bit steeper at 6 to 7%, but still well within the realm of possibilities. That would be a buyable pullback for sure, with this area needing to hold, but not even worried about that as of this morning, because again, closing all-time highs is pretty good. Looking at the Qs, yeah, I mean, so closing at all-time highs, just like the SPX, and moving averages are looking good, and things are just moving along. IWM, the strongest of the bunch for a long time, did have a little bit of pullback. Again, just letting these moving averages catch up. Nothing really upsetting or worrisome at all in this chart. Everything looks great. All right, so let's start to go under the hood a little bit. Let's look at some ETFs that are important. So XLF, and let's go to a weekly just to see the context, put this all in context. And you can see, this is still the important area. We haven't yet challenged it yet. Looks like we're coming up there fairly quickly. This $30 to $31 range, that's the important area. So, $29.50-ish or so. Again, up there. We'll see what happens when that happens, but the uptrend's intact. So this is just potential resistance. It may just need to move a little sideways in here, or it could, do whatever it wants to. It could break out and just go straight up, or it could reverse. But I think this is the important area to watch. Again, this is more for health of the market than anything else. Looking at the semiconductors. Semiconductors have literally moved sideways all of December, right? They've just consolidated this big run, moved sideways. The bullish action is that it touched the 23-day EMA twice, right? And bounced both times. So very, very, very strong action right there. Nothing to be bearish at all about. I think that this is a nice little maybe bull flag from here. Looks good on a tradable way. So I think semiconductors individually as a trading vehicle probably are setting up very nicely, and but this tells being the health of the market, people still think that it's going to go higher. Next up is lumber. So lumber looks a lot like the financials, coming up to a very important area, not too far below it. We'll see what happens when it gets up there, but as of right now, just nice run, sideways consolidation, looks pretty good. All right, so let's go a little deeper under the hood, and let's look at bonds. One of my favorite things to look at. This is bond ratio of IEI government bonds versus high yield bonds. And as you can see, I'm just going to get rid of this because it's not really needed anymore. The trend is lower, right? The trend is lower, and that's good for bonds. So we want to see this continually to decline, get back into this range, right, which we're headed towards, and that's a beautiful trending market that does not have too much stress in it. So bond ratio looks great. Credit spreads, the VIX. The VIX is chopping around sideways, but it's under 25, and the bigger trend is down. So I think that's a positive for the market. Let's look at the put call ratio. Now, the put call ratio is kind of interesting. Markets went out at all time highs, but the put call ratio is over here at 0.688. So, in some respects, people are positioning for a pullback or some kind of market swoon. Um, the charts, aren't really seeing that yet, and so the nice thing about the put call ratio here is that, you know, for another big push up, there's a lot of room here without getting too overheated. And I think that is pretty cool. And it kind of shows with some of the charts that kind of went sideways for a while, or kind of bull flagged a little bit. So it made people nervous. Um, they went ahead and are trying to front run the market. That never usually works. And so what's nice is that there's a lot of white space here, and the market can go ahead and get a little bit overheated and or kind of go to all-time highs again, and that would be plenty of room, right? Plenty of room. Moving on to the value line geometric index. Let's try that one more time. So very much like the financials and lumber, coming up to an important area. um, we'll see if it really is important or not in just a little bit, but yeah, so this is it. But this is a breadth indicator. There's still some white space up here. Still can move higher. I think that looks really, really good. Let's look at the fear and greed index. Here's the CNN fear and greed index. Neutral at 51. Again, there's room here for the market to go higher, which is good to see. Let's look at gold. So gold was interesting because this is the chart that we were kind of looking at, right? This kind of area right here. And when we zoom in to this most recent downtrend line, we're starting to break out above it. What does that mean? Honestly, it just means that gold is breaking its downtrend line. But it could mean that gold is about to start a new uptrend. We don't know that yet, but it is definitely now on my radar. So are they going to outperform, right? Because that'd be a more bearish scenario. So looking at gold SPX, we're not seeing that yet. Not even close at this point. So as of right now, gold may be doing well with the market at the same time. As long as we're not seeing the outperformance in gold, I'm not too concerned at all. But it was something that was interesting, so I wanted to bring it up. And you can see the percentage of stocks above the 50-day. We're in the red zone. But just kind of chopping around up here, I think that's really overall bullish action. If you have a lot of stocks over the 50-day, that means that they're in uptrends, and it's probably a pretty good market. It doesn't mean that we have to, pull back in a significant way. There'll be obviously choppiness, and it's going to go up and down. It won't stay in here, but I think overall that's a bullish look to the markets. So final words. I mean, looking at bonds, looking at breadth, looking at key indicators, looking at price action itself, market is looking fantastic going into the new year. Nothing to be worried or concerned about from what I can see. That could change at any moment, but I think it's a good time to be aggressively bullish, unless we start to see, moving averages get vertically violated, and a lot of those other indicators that I look at start to turn around or do something different. We're not seeing that. Again, I think this is an aggressively bullish environment as of today and going into the new year. Good luck out there. Know your time frame and risk tolerance, and everyone, happy new year.